Many property investors don't have an exit plan. Now, people sell their commercial investment property for two reasons: because they need to or they want to. There's a fine line between both. Let's discuss this now. The main reason I find that people have to sell is property they need category, partnership disputes, whether it be a divorce situation or a business partner, health reasons, they're deteriorating, they're losing enthusiasm, haven't got time to look after the property or spend the time on resources involved with owning a property. They're getting older and looking at consolidating their portfolios or liquidating, doing other things with their money. And obviously financial reasons, maybe their debt's getting too much for them. They want to buy something else or invest their money somewhere else or give money to their family or whatever reason. Another reason is they find a replacement. Now, many times investors have got the opportunity cost. Do they keep the existing property or they upgrade or change it to something else? I like to think of it, I talk to my clients and say, well, it's like a game of football. You own a property, you're holding the ball, you're running towards the goal line. If you believe that if you pass the ball to your teammate, they've got a better chance of scoring than you have, then you should. The same thing with property. If it's better to keep that property and you get a better return, then you keep it. If you think there's a better chance of passing to someone else or buying something else, high return, you should sell it. Now, for example, if you've got opportunity to buy a property which will be earning you bottom line $100,000 a year extra, it might cost you $1 million extra to buy it. But because of the cap rate of 5%, that building's worth $2 million. So you're better off buying that property for that business or whatever it may be than keeping an existing one. And it's surprising how many people just hang on for a long period of time expecting things to happen. Meanwhile, they're losing money because they won't reduce their price by a small margin to move on to their next project. Another reason is long leases. You've just gone through your portfolio, you've just renewed all the leases, and they've all got long leases, and it's a pretty safe investment for someone else. You can't really get more money out of it. So again, selling it, moving to something else, opportunity which may come along. Another reason, pretty similar lines, is you've made major improvements to the property and it's at its peak. You're getting maximum revenue out of the property and you think, well, let's do it again somewhere else, which a lot of successful investors do. So you spent all your money, you're getting top rental, it's time to move on. You can look at it both ways, depending on what sort of investor you are. You may be in a situation where the property may be a development site or in barely need of refurbishment. You're not the sort of person who wants to do it. You can't be bothered. You'd rather give it to someone else to do, even though deep down you know the return will be better. You're just not in the mood. You're not the sort of person who wants to do the work to get the high return. So rather than keep the headache, you'd rather pass it on to someone else who can do the work and get the return they deserve. Another situation is where we had recently, you had low interest rates and low cap rates. And the opportunity was to sell up at the peak of the market. There's always anticipation that the cap rates will improve in time, but it didn't happen. So the people that sold 2-3 years ago at low cap rates are benefiting now. Can buy the same property at a lower price now, getting the same return. So the property has hit its peak return-wise that period of time. So it could be a good time to sell. You just could be totally stressed out with a property, whether it's doing good or badly. You're sick of the tenants, you're sick of the situation with the tax situation and the government situation, and the council situation. It's just too hard. And you've had enough. You want to sell up. So you just sell up. Another one, which is probably a good reason, you're comfortably with a nice property, getting a nice return, things are moving on smoothly. All of a sudden, door knock, developer or a neighbor or some other investor wants to pay a premium for your property, substantially more than you believe it's worth. And they want to pay, or they can pay a higher premium because it's strategically important for them to buy it from you. That could be with your neighbors, Could be someone who desperately wants to move into the area for their business, whatever reason it is. They're offering you a premium for the property. In that situation, you're quite better off selling. It's probably the best way to sell. It does happen. In summary, ensure you have got an exit plan. Most investors don't have an exit plan. Now, I keep saying to my clients, think about selling your property the day after you buy it. Keep the property at its peak so it's saleable. Don't forget, the reason why you want to sell is probably the reason why people don't want to buy it. And you want to max your prices, work together with your property consultant to make sure the property is at its peak, the top rentals, you're the best possible tenants, and you'll succeed in the property game. I'd like to hear comments. Please subscribe to this channel.